Marcus Hommer, CEO of Bawat. You have just released your Q2 or half-year figures yesterday. A pretty busy quarter, I could see of the numbers, not just on the result side, but also on the achievement side and everything else next to that. But let's dig a little bit into the numbers and on the achievements. So I will let the stage to you, Marcus.
Thank you, Michael, and thank you to the audience for listening in on this Q2 report. And you are absolutely right, Michael. It has been a busy quarter, both from an operational point of view, but also from a financing point of view. So if I just step into the next slide here, I'll start a little bit on the operation, speak about financing, and then also I'd like to spend some time speaking about what's called BaaS, which is Ballast as a Service, which is, we can see that is picking up, which we have also made some work and thoughts on in the quarter. But top line wise, we have an order intake for the second quarter of a little bit more than 11 million Swedish, which together with our first quarter gives us a little bit more than 20.5 million Swedish in order intake for the first half year. That supports a repeated guidance for the year, which we have been out saying is between 40 to 60 million for the full year, but it will be influenced by orders from our mobile orders, either negatively or hopefully positively, based on the timing and the volume. And I'll come back to that, why that can have a quite significant effect when I speak about our service business in the coming points. The gross profit for the quarter was actually above our long-term projection of 35%. And if I look now for the first half year, we are at more than 28%, which is in line with actually our long-term guidance of 30%, pending our product mix between ship installations, mobile installations, and service. And we are hitting this high gross margin for two reasons. First of all, because we have a quite large percentage of the conversion into sales on mobile systems, but also because all old systems are now out of the backlog, and we are only working with a backlog that we execute on, which is new systems where we know exactly what we are doing. So even if we are a young company, we now shows that what we do, we actually do quite well, and we are quite sure that we will hit the 30% product mix very soon going into the future. Sales on the Q2 is a little bit more than 4 million Swedish, and it's lower than last year, and it's lower than the projection for the full year. But it simply reflects just the timing on conversion. So we have a couple of large mobile systems that in Q3 will be finished, and there we will see a lot of sales coming in. We also have in the backlog things that we cannot execute until next year. So this is why the sales figures look as they do now. But as I said, with the gross margin percentage that we have, we are more focused on the order intake line than actually the timing on conversion. But in general, we are converting in a 4 to 6 months range.
Yeah, but let's dig a little bit into the gross margin, because normally if you see a company that has a revenue of 4 million, then there's such a cost overrun that the gross margin will be very negative. Yours are exactly opposite. You are trending above your long-term projections. So can you explain a little bit about this? Is that you are solely outsourced all your production and a little bit about this product mix? Is it because it's much higher margins in your mobile solutions?
It's the combination of much higher margins in the mobile solution. And don't forget, we are an engineering company, so we don't have an overhead to absorb in both in hardware manufacturing, in storage facilities and the like. So that's why we can have a gross margin percentage that looks like this. And because we have now standardized quite a bit on all our equipment and on all our deliveries, that means also that the organization that we have now can deliver more, and that of course also increases the gross margin.
So you're very comfortable, and I think that makes it very reasonable to focus on the order intake. So last question: are you seeing the same prices in that order book you're getting in? So is that why you're so comfortable with that you are now hitting a good gross margin?
We are, we are still price competitive, but we have improved our able to execute and purchase and design, and that's why we are very comfortable on our our gross margin also going forward.
Perfect. Thank you, Magnus.
Mm-hmm. The quarter also brought in a nice large fleet order for a European customer. It's 10 plus vessels. We are now on the first one, and we will convert that order here in 23 and 24 before the final deadline in September. It's a nice confirmation once again on our technology, and it puts even more oomph to our reference list. So we are pleased to see that. And then a couple of points regarding our ballast as a service. And this reflects also our guidance for the full year, because we have seen in the quarter an increased activity for customers asking for not only mobile system, but also if we as a service provider can deliver the service simply to treat the ballast water, and we keep the mobile systems on our books. And this is why it's somewhat difficult to predict the full year guidance, because sometimes a customer comes and say, I like to buy a mobile system, but sometimes they say, I like to buy the service. And for us, that has an impact on the full year projections. But we can see the quoting activity, as I say, is increasing. It's also the quarter where we put in the first long-term committed contract for a US customer. It's an interesting contract where we have treated some of the ballast water, and then we are standby onshore for let's say contingency purposes for the client. And we are standby with a 4 weeks notice period. So that means that the equipment we have standby, we can actually use to service other clients in between. So that's actually the best for both worlds for us.
Yeah, because when I read that in your report, I was a little bit baffled on how I should understand it. Does this client, does they take up this the whole system? Do they pay for the whole system, and then actually you could use it otherwhere? Is that how I should understand it? That you have actually sold the system?
What they actually do is they pay for the availability of the system, which is quite common as on service contracts in this business. So they pay for the availability, and then they have a call-out period for 4 weeks, because they know in advance if they would need it or not. And in that 4-week time, we are allowed to use it. So that means that we, of course, need to be ready if they call it out. But as long as they haven't called it out, we can use it on other customers.
On other customers. Yeah. So again, going a little bit into it, you say there's, of course, there's an uncertainty on your guidance. Either you will get it as service revenue, or you will get it as selling a system. I guess one of the first part is more profitable, but also takes up more capital. Do we have sufficient capital to run a lot of those models, or are you hoping in the future to sell more into to this segment?
We have right now we have systems that's coming in production and coming into our service, but we are also working on at our service level with partners that would bring in capital and buy some of this equipment, and then return part of the service value back to us. So that's definitely in the books, and this is also. That brings me into the next point, that the quarter also saw us signing a term sheet agreement with Damen Green Solution, a large Dutch yacht group globally, where we are actually joining forces on the mobile systems, both in terms of assembly them that Damen will assemble them for us, but also using their sales network to sell them. Damen has in the past had their own technology, which they are now putting at rest. And then together we are using the Bawat technology in a Damen assembly and sale perspective. That means that we can scale fast, and we have a quality partner with a global footprint. And that will basically increase our ability to deliver both fast and with quality these mobile systems, both to customers, but also into our own service network.
Perfect.
The last point on the graph is on the second last point on the graph is on the financing activities that we've had for the quarter. I think we already in Q1 report and on subsequent events reported that we had approval from the NEFCO, the Nordic Environmental Financing Corporation, where they are, committing finance for 25 million in a 1-to-1 equity match from our new and existing shareholders. So we had carried out a directed share issue. So we have raised close to 19 million in the directed share issue. So we have more than matched the first tranche from NEFCO of 1.3 million euro. And then we have an ability to call the remaining funds from NEFCO before the summer next year, and based on the 1-to-1 match. So we are short of 6.2 million Swedish krona that we can raise in order to fully call the financing from NEFCO. So that puts hopefully an end to the capital raise into Bawat that brings us into profitability by the end of 2024 that we have predicted and reported lately also.
Yeah, let's bring a little bit into that, because when I read the report, your order book is I know it can differ, but your revenue should be much larger last year. If I look at your cost side under the gross margin, which looks good, it looks pretty flat if you look away from the Swedish crown. So to me, are you able to execute much in 24 a much higher expected order book with around the same cost base? Is that how we should look at your company going into 24?
I think that's exactly how you should look at it, Michael. I think we have established a cost base now, both from a sales but also from a engineering and project management point of view, that can execute on both the current order book but also on a future growing order book that we see into. And this is especially because we are with Damen, we need less resources on the mobile systems, because they are now executing the purchasing, the assembly on let's say on volume on mobile systems, and that means that we have more power in our own organizations to focus on the ship solutions. We have also now standardized our mobile systems. That means from a purchasing and execution point of view, it's a simple way for Damen to purchase, assembly, and get them out of the yard that we are manufacturing on.
That makes sense.
Yeah. So we are at a cost level today where we can do what we do, but we can also take more through the books without increasing our cost. Last but not least, we have received both from European patent, but also from the US patent authorities on our port-based patent, the intention to grant, which is called in Europe, and the notice of allowance, which is called in the US. So once again, it puts it underline also our IP strategy, that we are protecting our place in the market, not only by our type approval, but also with IP protection on our, let's say, very innovative green solutions on how to treat ballast water. So all in all, very busy, very productive Q2, and we're looking into the rest of the year so far with a positive eyes.
Perfect. I have a question. It's regarding, you mentioned in your report, you don't have it on this slide, but you mentioned in your report that you are seeing retrofit of systems that is built in for a couple of years ago and are not working. That could be interesting on the ship side, not on the mobile side.
Yeah.
Have you seen any orders from that? The proof in the pudding that you always talk about this edge when the IMO rule says everybody should have it. How big and how long is your market afterwards that? But it could actually maybe prove to be bigger if something that has already been built doesn't work and yours work. So have you seen any orders actually coming in from such a ship?
We are still to see the first order, but we have quite a lot of quotes out with customers where they have actually installed competitor systems 3, 4, 5 years ago, and are now looking to replace them based on either performance or mostly lack thereof. So I'm quite sure that we, within the next 2 quarters, will see those type of orders also coming into our book. As you know, we have preached all along that there will be a retrofit on the retrofit, and we still believe and see that it's coming. We also hear it from our competitors, and also our service business is also very much built on, you know, non-performing equipment that is out there, and we can see that simply by the quoting activities on our service, where customers are coming to port and they have a faulty system or a system that is not approved, and they cannot deballast, so they need a service. So it all points in the same direction from our perspective.
And lastly, a question. Last time we spoke, and also with your chief, I think it was chief scientific, you had very high expectation from some European ports. You know, some of the large European ports actually starting to wonder whether they should have this mobile system installed. Any more thing materializing there? I know it's not coming as an order, but anything materializing, something getting closer there?
Yes, we have established our first subsidiary in Western Europe with a focus on European ports, and are now actively sourcing equipment into that company to make sure that we can service the requests that we are getting. So I think the next 2 quarters will show material reporting on those activities, which we also wrote in our Q2 report, that once there is significant volume, we will of course report it. But right now it's difficult to guide on it due to timing. But we are actively increasing our ability, and I'm quite sure that over the next half year we will be able to tell much more on that traction.
Perfect. Thank you, Marcus.
Thank you very much, and thanks for all listening.